Hello everyone, this is Jay and today's my weekly Friday video where I review my portfolio to see what's undervalued. I'm gonna make a deposit after I make this video and I want to have an idea of where am I gonna allocate that money into as a DCA investor. I also want to review the challenge that I did on the last video about VYM. So I'm going to give you an update on that. And then I also wanted to review a dividend stock that is in the SCHD holdings. But let's go right into the updates tab so you guys can see the challenge. So I said in the challenge yesterday in the VYM video that if I got between 1 and 50 likes, so I was pretty much going to make the deposit. It was like a guaranteed thing. I was going to make a $25 deposit and put it towards VYM yesterday, no matter where the price was at. So the at 208, as you can see right here, the video had 130 views and 21 likes. My VYM videos, for some reason, do not do very good. The SCHD ones do much better. So please let me know. Leave me your opinion in the comment section. Is there something that you guys don't like about VYM? Is there another ETF that I should be covering? So this right here, it cleared at $24.94. As you can see, the date right here, December 21st. VYM is the ticker symbol, and he added 0.227 shares. The share price was at $109.88. So I'm definitely very excited. We're gonna go right into my portfolio actually, because if you see right here in VYM right here, I am now at 6.213 shares. This is with the dividend reinvested that they just paid this week, plus the $25 extra that I just put yesterday into this ETF. And today I'm gonna put another $25 since you guys know I have my $25 weekly strategy with VYM and SCHD. So these two stocks right here will be getting $25 each. And as you can see, they just continue to grow. I'm very excited. I'm just really, that income just continues to grow. I can't wait to see it in 10, 12, 15 years from now. I want to compare this video to those videos later on in a decade from now. So I'm definitely very excited. As you can see right here, I am up in both SCHD and VYM. VYM, I'm up higher actually by almost 5%. So I'm definitely very excited about that. All right, so let's go right into what we came for, which is to see what is undervalued. So all realty income is still undervalued to me and to my portfolio. It is at $56.96. So I'm going to be making a small buy on this one also again because it is under my cost. Once it goes above like $59, I'm going to stop because it's a very large position for a single stock. And I want to really focus on VYM to continue to grow that position. Another one is J&J and PFE, Pfizer. These two, I'm definitely going to make a special purchase again this week. Right now, J&J, it is at $154.84. My cost per share is $160. So I'm under my cost. I really like J&J. And PFE, Pfizer, it was like around $26 the other day, $26, $25. Now it went back up to $28.31. So I want to continue taking advantage. I don't get nervous when they take a dip like this, especially a good company like Pfizer, which is very popular. They've been in business for like over 100 years, longer than all of us watching this video. And they're looking good. They're still looking good. So I'm definitely going to continue buying more and more on Pfizer, continue to bring my costs down. Hopefully I can bring it down to like $30. That would be awesome. And then just hold it for a couple of years and see how it performs. So that's definitely another one that I really like. In Kenvue, which is one of the other ones that I'm in the red, I'm in the negative by 9%, by $20. I'm going to make my $5 purchase. It is creeping back up. It is right now, it closed yesterday at $21.22. My cost per share is $23. I started on IPO. So I'm going to continue buying that one. I really like their products. And they come from J&J, so I'm a fan. One that I see that is coming down in price, which I'm very excited about, it is Starbucks, ticker symbol SBUX. I have 2.5 shares. I'm still up by 6%, but I really want to continue buying more Starbucks. I think I am going to do my $5 purchase in Starbucks today because it's getting closer to my cost. My cost is $88.68. And I really like Starbucks. I know that there's going to be some more competition, especially with McDonald's opening their new store, like drinks store, to compete with Starbucks, which is going to be called Cosmics. So that's going to be some competition for Starbucks. But Starbucks, people that go to Starbucks, usually they feel like they are in the high-end type of community. So I'm sure Starbucks is going to be just fine. The McDonald's branch is going to be, which is Cosmics, it is going to be a little bit cheaper according to some reports, some people that have seen the menu. So, but Starbucks, I don't think Starbucks is going to lose anything, to be honest with you. They have some competition right now, like with Dunkin' Donuts, Dutch Brothers, and other companies. So I don't think that they will be losing anything, to be honest with you. It is always packed. I know Starbucks as a brand is like, for example, Apple. There's just a fan base on that. So let's go right into my stock analysis tab right here. And it shows right here, it closed yesterday at $95.33. It is down in the last month 8%, 8.5%. So I'm definitely excited about that. It is down year to date 5%, over 5%. So I definitely want to continue to grow this position in Starbucks. I was going to say Apple. So, but yeah, definitely want to. Market cap for this company is $108 billion. Earnings per share 3.58. PE ratio 26.63. Forward PE 22.53. So there's a sign that they're going to be even more undervalued. Dividend right now, it is at $2.28 a share per year, 2.39%. So any shares that you pick up right now, you will pick them up with a 2.39% dividend. The 52-week range is a 52-week low of $89.21 and 52-week high of $115.48. So this company is definitely looking really, really good. I really wanted to get closer and closer to my cost, so then I can start making some special purchases on those. That's what I call them when I do more than $5. But I usually do $5 into many of the companies that I hold right now. All right, so let's go back into my portfolio. MPW is the other company that I have in the red, but I'm not going to be making any purchases anytime soon. I want to continue growing these other ones, especially Pfizer and J&J. I really like those two in the healthcare sector. So I'm going to continue bringing my costs. I feel like my strategy has been working. Every time any of these companies go on a dip, I just go ahead and start being bullish on them. Like, for example, KO, Coca-Cola, I was able to bring my cost to $57.56. I am in the positive by less than 1%, but I am in the positive, which is good. I think it's going to continue to go up. And another stock that I really wanted to review, let's go to my second stock analysis tab right here, which is Cisco System Inc., ticker symbol CSCO. It closed yesterday at $49.70. This company, it is up year to date at 3.84%. So it's definitely up right now. Market cap for this company, it is $201 billion. So definitely looking really good. That EPS, earning per share, 3.30. PE ratio 15.06. Forward PE 12.80. So it's showing some signs that it will be undervalued in the future even more. I really like this company the way it looks right now. That dividend, if you pick up any shares right now at $49.70, your dividend will be $1.56 a share per year. 3.14% dividend yield. So definitely looking really good. 52-week range, it is a 52-week low of $45.56. And 52-week high, $58.19. Let's go very quickly. Oh, actually, their ex-dividend date is going to be in January 3rd of 2024. So any shares that you own by January 2nd, you will definitely be in line to receive this dividend right here. So let's go into the financials. There was a few things that I wanted to look at the financials, but if you see right here in the chart, the revenue, it is growing, which is good. I really like it. From 2021, it was $49 billion to 2022, $51 billion, and 2023 is looking like around $56 billion. So it's definitely continuing to grow, which is something that I really like. And the free cash flow, which is what they use to pay the dividends, look at this right here. From 2019, $14 billion to 2020, $14 billion also. $14 billion, it was pretty much flat these 3 years from 2019 to 2021. Then it went down in 2022 to $12 billion. But look at in 2023, $19 billion. So definitely looking really good in free cash flow. So that's nice. Let's go ahead and take a look at the balance sheet. And I wanted to take a look at the total debt. And right here, look at this. Total debt is just continuing to go down. They're definitely using their cash to continue to bring down that debt, which is great. They have $14 billion in total debt in 2020. 2021, $11 billion. 2022, $9 billion. And then 2023, $8 billion. So they're definitely bringing that debt down, which is definitely great. And I really like that. Then the dividends right here. Let's go into the dividends tab, which is the dividend yield, as I said before, 3.14%, $1.56 a share per year. Look at that payout ratio, 47.27% payout ratio. So they definitely have room to grow that dividend, or what they're doing right now, which it looks like they're doing, they're paying with their free cash that they have, they're paying down their debt, which is really good. I really like that. Their dividend growth is very small, 2.63%. But it looks like what they're doing is they're paying off their debt. You know, they're paying it down, which is good. I really like that from the company. If you see from 2020, they were paying 35 cents, then they went up to 36 cents. Then in 2021, they went up to 37 cents. 2022, 38 cents, and 2023, 39 cents. So they're just continuing to grow their dividend by 1 cent a year. Pretty much that's what it looks like. So this is a company, do your research in it. Of course, none of this is financial advice, guys, but maybe a company that you're looking into or that you were not looking into maybe. Please leave me in the comment section any of the companies that you see as undervalued right now. I found this one from the SCHD Holdings, and I really like the numbers that I saw. So definitely looking really good. All right, everyone. Please let me know in the comment section anything that you're picking up today, any shares of any companies. Please let me know in the comments so I can reply back. I can see what you guys are investing in. Maybe something that I'm missing. Maybe something I can deploy this cash on. The $145 that I have right here. I really want to deploy it so I can start growing that money, or put that money somewhere where it will grow in a few years. I'm a buy and hold investor, so I really like to buy and hold. I see that this strategy definitely work. I really like, for example, Bank of America put a lump sum, and right now it is paying off. I'm up 14%, $134. So I really like that. I bought it the beginning of the year when there was the bank crisis that everybody was selling their shares. So I was like, you know what? Everybody's selling, I'm buying. So I bought a big lump sum since I have received some money then, and it's definitely paying off. I received 2 dividends for $6. It was a little bit over $6, so I dripped them back in because the shares were still under my cost. But now I just turned off the drip. So I think the next dividend payment, I should get it this month or next month. I gotta take a look. Oh yes, it says right here it is in December, so it's probably gonna be next week when I get paid that dividend, because I haven't received it yet. And I am going to put it probably towards SCHD or VYM. That's what I'm going to do. I turned off the drip on Bank of America and MPW, and those dividends, I'm going to put them towards VYM and SCHD. I really want to grow those two positions, especially VYM, since I have it so low. It went up to the 5th spot. A couple weeks ago, it was in the 7th spot, and now it is in the 5th spot of my largest holdings. So I'm definitely very, very excited about that. All right, everyone. I hope, please don't forget to hit the like button. I really forgot to mention that. Let's continue to support the channel. That really helps out the channel. Continue to reach others and continue to grow. Continue to keep me motivated. I definitely want to continue to do more videos. I have some goals in mind for 2024. Maybe I'll make a video before the year end for 2024 on any goals that I have. All right, everyone. So I hope you enjoyed this video, and I'll see you on the next one on Sunday. Thank you. Disclaimer, I am not a financial advisor, and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.